let's welcome on board the next guest on the show. We have Rumki Majumdar, the economist from Deloitte India, joining us on the show to talk to us about how exactly the macros are shaping up. Hi Rumki, good to be speaking with you. Well, growth in the first half of the year has been slower than expected. GDP fell below the 7% mark and the expectations are much lower for the full year. But what's the expectation for calendar year 2025 now? Are you anticipating a bit of a pickup?
Last year, people knew there was an election and there will be an election outcome in the month of June, or there will be US elections and the results will be out by, say, first week of November. So there was a definite date to it. And that's why people can postpone their decisions or decision making till then. But in this year, we know there will be uncertainties in policies in the US. There will be might be some escalation in the wars as well, but we really do not have any definite timelines to it. So that's why there is no deadline to what extent a decision can be postponed, and hence there will be this year. I think the activity in capex will be much more proactive, where people will take on decisions factoring in a lot of uncertainties that is coming in the way. That would help in India in ensuring that investments, especially in the private capex, will actually pick up quite faster. And we are expecting that to happen as well. On the other hand, we are expecting the rural demand to hold up well because agriculture's output remains steady. We have seen Manrega employment demand to come down quite significantly over the last few quarters. And that kind of gives confidence that employment in the rural economy is doing well. Services sector has done well, be it in terms of exports, be it in terms of output to or contribution to GDP. And that will help urban demand to pick up because services sectors do contribute to a lot more to urban income as well. So from the capex side, investment, private capex is expected to pick up. Consumption will be much more stronger this year. And of course, there will be global uncertainties which will weigh on, but I think the decisions will be much more quicker and activity will continue over the year throughout.
Right. Fed now is likely to cut rates just twice in 2025 by 25 basis each versus about, 4 times earlier that was penciled in. What do you think it means for us, Rumki, and what do you think RBI's next move is going to be?
So we expect the US Fed to be a lot more cautious. As you said, the expectations are twice, and there is justification to it as well, because if there are trade policies that are more inward looking, which it will have an impact on the inflation in the West. Of course, so far the Fed has managed to keep the prices under check in the US, but it might escalate if the tariff policies go up because import prices will be shooting up. So in the short run, there will be an escalation of inflation in the West. That will have an impact on India because we might be importing inflation as well, because if prices in the West goes up, it impacts our prices in the domestic market as well. Secondly, if there is a trade disruption, that also will have an influence on prices. Now, given the fact that RBI has prioritized inflation over the years and has a target to achieve, and so far inflation has not come down to the levels that RBI is comfortable with, RBI may go for a pause for a while. Of course, there is a possibility of a cut because Fed has gone for 2 cuts. So the interest differential between the US and India, that is quite good. So that gives some elbow room for the RBI to possibly go for a rate cut. But inflation will be a very key important factor that will help RBI to go with confidence whether or not to cut policy rates going forward.
You're talking about inflation being a bit sticky, but what's your own assessment? When will it come down? Are you seeing any initial signs of that?
We are hopeful because if you look at the reason why inflation has been up is the food and fuel prices, especially food prices. And food prices we expect to be coming down because our agriculture output has remained well. It is given that the Kharif crops have been good and Rabi sowing has been also pretty good. So we expect inflation in the food category will remain contained. core prices has been below 4%, which it was edging up a little, but still below 4%. So at least core prices are contained. So overall, we expect prices to come down starting, say, February or so. And if for consecutive 3-4 months prices continue to remain low, that will probably will anchor inflation expectations also. So, which is very important, because if you have high inflations for a very long time, it kind of results in a spiraling effect on the inflation expectation, which is not good. And which is what RBI is trying to ensure it remains contained. So we expect inflation rates to come down to the RBI's comfort level by the first half of the next fiscal year. And RBI will also be much more comfortable in taking measures accordingly.
Right. The Trump administration, Rumki, is all set to take charge on January 20th as well. And it's largely expected that Trump will impose additional tariffs in several countries, including India. How do you read this development, and what kind of implications could it have on the economy?
So, of course, there are two parts to it. The trade will have an effect because, of course, we are one of we are in big relationship with the US in terms of trade and investments, and we do export a lot to the US. In case there are trade restrictions imposed, especially in the manufacturing sector, it will become harder for us to export manufacturing goods into the US. But that said, there is also a opportunity for India, because we have also been a biggest service trade partner with the US. In fact, we have a trade surplus in services. And so far, we do not foresee any restrictions in services coming up. And in case if there is promotion of in-house manufacturing in the US, there will be servicification of manufacturing, which means the manufacturing sector itself will require a lot of services, and that is where India can actually take an advantage and actually up its game in terms of providing those services to the US manufacturing sector. And this is something which we are looking at. And I kind of refer to this as turning a lime into a lemonade possibility. I think services sector will actually do a very well amidst all these trade tensions, because the whole policy of US is more aligned towards manufacturing. They still remains dependent on services for the other, and that is where India can actually step up its game and compensate for whatever loss that happens in the manufacturing by exporting more services to the US.
Sure, Rumki, last couple of quick questions. What's the expectation on budget?
Absolutely. Because what we believe is the government understands the role the CapEx is playing here. It is not only helping in improving the logistics cost, it is also helping in bringing more rural economy, connecting the rural economy to the main economy, right? There is a recent study that SBI has come up with, which says the poverty rates in India has come down, and one of the critical factors has been is because of the connectivity the rural economy has found over the last few years. The rural economy is able to market their product well. They are able to reach to tier 1, tier 2 cities better, and this is helping in rural income. So there is definitely a big push, the multiplier effect of infrastructure that is kind of kicking in, and we can see the effect of that. So the government will continue that investment up. Of course, it also crowds in private investments, and so far private investments has not picked up the momentum that we would like to see, and that is where I think the government will try to fill in that gap by keeping up the expenditure there. Fiscal deficit, I think the government will be very prudent. So far, the government has been very, very careful about its expenses. Despite this being a election year, we have seen the government expenses have been just about 52%, 52.5% of the capex, the budget expenses that the government had targeted this year. And that tells you that the government is very mindful of how prudently it is spending. Not it is kind of containing its revenue expenditure and putting more money into capex, and that is something which will continue going forward as well.
Right. I also want to talk about the currency too, Rumki, because that continues to depreciate on a daily basis. Tell me, while it has been a relative outperformer versus other emerging market currencies, do you see this depreciation continue or dollar strength continue?
See, it's important to keep the exchange rate stable, whether it is appreciation or depreciation. If fast depreciation is not good, equally fast appreciation is neither bodes well. And that is why intervention will be required, because stability is what exporters or even traders do prefer. And lately we have seen depreciation in the currency because of the fact that US dollar index itself has appreciated quite a lot. And given that there's a lot of talks around how trade policy will evolve in the US, so there is a kind of a fear which is resulting in a dollar appreciation. And as a result of which, pretty much every currency has faced the depreciation pressure against the dollar. What we expect is, given that economic fundamentals in India are very strong, we have quite a strong footing in ensuring a sustained growth over the next few years. And that will help in a way, because investors will see potential in India. Investors will be able to realize a lot more from their investments going forward, returns as such. So this will keep the capital flows into the country at a stable levels. So that will keep the rupee value quite stable. And RBI will, on time to time, will keep influencing the market, or intervening rather in the market, to make sure that the stability is maintained. So while there will be some depreciation pressures, but it will not be as fast as what other currencies are experiencing right now.
Thanks, Rumki, for that. But on to a very
If you like this video, then like, share and subscribe to ET Now.